How would you play this market if that's the case? If the money supply is going to stay increased, if inflation is going to stay maybe on the higher end of things, of that higher than that 2% level, how do you play this?
Yeah, I mean, well, given that, stocks are maybe on the higher end of their range, but we are expecting the money side will go higher. Well, just take a look at this chart. I got the money supply. Again, if you look at this, looks parabolic to me, not just commenting, but you also just look at the spot gold. Now, they're not making any more gold. The amount of gold that has been made, I guess very slowly it's being made underground, or it's being brought up to the surface anyways. But they're not making any more gold. We are producing, we're pulling some out of the ground at a very slow rate, but the price of gold is predictably going up with the money supply. It's a little bit out of whack right now. Have not seen this gold spike up with this COVID section of money supply increase. I think that's going to happen. I think that we're close to that, and I actually want to get into that in our trades of the day, Brian.
Yeah, I mean, you look at that, it seems like there's a little bit of catch up to be due. And so our trade of the day is a way to play gold here. And Joe's got that for you. He'll break it down. How you playing it?
Yeah, just looking. This is just a 5-year chart of gold, bringing it a little bit closer in here. This looks like looked like a double top maybe, or trying to break out of this resistance area. This to me looks like a head and shoulders bottoming formation here. I think there's potential to break out here, and this is the GLD. That's a ETF that tracks the gold futures. I think this 190 area is going to be an area where if we break above it, there could be significant headwinds or significant tailwinds just to propel it a lot higher. And this is just going to be an inflation play for me, just protecting my portfolio against inflation. I'm going to buy a leap looking at the June 2025 190 call for $19. Going to spend about 3% of my portfolio to do that. I'll have inflation protection, and I think that 3% can turn easily into 6 or 9%, just with a modest increase, or modest, or just a realization of that upside down head and shoulders.
Yeah, I think this is interesting because when you got the leap, there's obviously, when you're using those kinds of options, there's not as much decay value in the premium of those options. So there's sort of time for this sort of trade to play out and work for you. And so Joe's taking 3% of his portfolio, saying, I'm going to use 3% of the premium of my portfolio, use this as an inflation protection on the portfolio. To me, it seems like a great play because, like you said, above that 190, we probably get some explosion to the upside. If it tends to trend back down into that lower end of the channel, probably due to higher interest rates, that would sort of crimp on the money supply sort of issue here. There would be time to sort of sell out of this call, not necessarily hold this call all the way to expiration. So at least you're not losing all 3% that you'd outlay. So to me, I look at this as once this call probably gets down to less than 1% or around that 1% value, or the option price is lost, so let's say half or 2/3 of its premium, I'd probably sell out of this option and look for a different trade, not just watch this thing go to zero.
That's a good call. Now, another trade idea. We talked about this earlier. We got earnings coming up this week. Brian, what do you see in JP Morgan?
Yeah, the banks have been really on fire, specifically JP Morgan. Look at that chart. Basically exploding in the back half of this year to the upside. And as soon as the 10-year looked like it wasn't going to get and stay above 5% and started coming down, we saw JP Morgan really take off. And, we hold this portfolio for clients. I like the stock in general because it's such a big weighting as part of the bank financial sector here. And they really have been the leaders on money center issues here and that sort of part of the industry. And they've really been leaders in that in terms of the rest of the marketplace. So this is a stock that we like relative to the rest of the money center banks here. It's had a great run, but really it's now trading at the top end of the channel, and earnings are coming up this Friday. When I look at the earnings report, I look back and I see over the last, let's call it 3 or 4 years, only 10% of those earnings timeframes have seen greater than 6% move. So even though earnings is a big event, typically for JP Morgan, it's not that big of a money mover or market mover in terms of the price action of the stock. Although we've seen one move down of 6% after earnings. We've seen one of 7% to the upside in the last few years, but that's been it. The rest is really a tight range. And now we're trading at the top end of the channel. So one trade I like to do when I look at JP Morgan here is maybe the valuation's getting a little higher here. Normally, heading into an earning, I don't like to sell a call because we can get a great earnings forecast, and all of a sudden you've blown through the strike and you've given up all your upside. But the fact that the stock is at the top end of the channel here, I'm looking to sell this Friday option expiring. So the earnings come out Friday morning. This option will expire by the close on Friday in the afternoon. And it's the Jan 172.5 call. We'll want to sell that for about $1.50. So you're looking at almost capturing 1% premium. And I'm just doing this because I'm pretty confident we don't get through the 172.5 strike move. That would be more than about a 3% move to the upside based on where the stock is trading now. Plus, it would sort of gap through that upper end of the channel. So I'm looking just to take in some premium, take some profit on the great run that it has. And, you know, if it pulls back, I'm going to continue to own this stock anyways in my portfolio. So this is just an extra way to sort of add extra premium to my position.
Yeah, it seems like a good spot. You're kind of just saying, I'd like to sell at the top of this channel, which we have reached. Just take some off the table here. That is very prudent to me. There's risk, you know, not a lot of upside gap risk to me here. Now, if it does happen, that's fine. You're collecting your premiums. You're still happy with that, but you're going to be way better off if we do pull off just slightly.
Yeah, and if you know, again, this option expires this Friday. So if it blows through 172.5, I have to be either willing to get short the stock if I don't own it, or if I am long it, I'd get called away. So watch that on Friday. Pay attention to what the earnings look like, where the stock moves, because you're going to have to make some sort of positional adjustment if the stock gaps higher. But in my case, I'm willing to get called away. We're long the stock, but I'm willing to get called away on some of it if it were to move higher.
Is there a price you'd buy it back before earnings? Maybe get.
Well, yeah, I mean, the CPI reports on Thursday, right? So that could be a market moving event. If that sort of comes in, inflation a little bit higher than expectation, we could see interest rates move higher. We could see the market sell off a little bit. That might be a time where I actually do close the trade before Friday, because those option premiums will probably, you know, come off pretty hard at that point.